Welcome back to Alpha Recap, your fast, friendly debrief on the market movers from today. Great to have you with us. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everybody! Big day of headlines and a lot to unpack. We'll run through the highlights and what they could mean for different types of investors.
All right, quick roadmap. We're covering a Photonics milestone, a geopolitical headline that rocked tech chatter, a vendor resilience product launch, a retail attention spike for a major brand, and a steady drumbeat of microcap filings.
Short and sweet. Let's dive in.
First up, Poet Technologies. Analysts noted the company reported a pro forma cash balance of $430 million and has raised $375 million across 3 funding rounds. They also put a target of 30,000 photonic engines for 2026.
And the way some analysts framed it, this moves the story from pure R&D toward commercial execution. I mean, when you step back and look at this, the capital gives them runway.
Right. And the other thing is, hitting that 30,000 engine target in 2026 is the real operational pivot. Shipment cadence, average selling price stability, and gross margins will tell the tale.
Exactly. Analysts compared the art to Marvell. Remember a multi-year path from niche tech to hyperscaler backbone? Some see a big re-rating if Poet executes. Others point out the classic hardware trap. Prototypes are one thing. Repeatable, margin-generating volume is another.
So, what really stands out here is the capital base. $430 million plus institutional funding reduces immediate financing risk, but execution risk remains. And the number that really caught our eye, $430 million.
Yeah, that tracks.
Moving on, the geopolitical headline that popped today. A report alleged threats from Iran against a handful of tech majors, including Nvidia and Apple. Analysts flagged this as a headline-driven risk for large-cap technology and global supply chains.
Look, geopolitical noise like this is a latent shock vector. Even without confirmation, markets closed reacting to uncertainty. Implied volatility got repriced in some corners. Not a full market rout, but spiky.
Not a great day for chip and hardware supply chain nerves.
Right, and there was limited attribution in the reporting. So most analysts treated it as something to monitor rather than an immediate balance sheet problem.
I mean, when you step back and look at this, threats aimed at Nvidia hit compute and data center chains, and threats aimed at Apple touch hardware manufacturing and retail networks. The market prices contingency even when the facts are thin.
Agreed. One camp thinks the impact will be transient. Another warns that any escalation could force supply chain rerouting and margin pressure for equipment makers and consumer hardware firms.
Now a more technical but important one. CloudM launched a product called Continuity on April 1st. It's positioned to provide instant recovery between Microsoft 365 and Google Workspace.
Analysts saw this as a vendor risk and resilience story. For regulated customers, the idea of seamless failover between the 2 big productivity suites reframes vendor lock-in and procurement conversations.
Yeah, absolutely. CloudM put out coordinated PR releases, which suggested a deliberate rollout. Some observers think it increases procurement leverage and might nudge budgets toward third-party resilience tools over time.
Honestly, I was a bit surprised by this one.
Me too. 2 PR releases on the same day. Somebody wanted attention.
The divergence here is interesting. Some see it as a resilience enhancement that could actually help incumbents by making customers more comfortable with cloud deployments. Others view it as an erosion of single-vendor stickiness, a slow-burn competitive pressure.
Switching gears, retail attention spiked for Nike. Google Trends recorded about 10,000 searches, up 100% versus baseline. Historically, that correlates with higher trading volume and intraday volatility.
Short-term traders love this stuff. It's a probabilistic signal. More attention often equals more trading and wider intraday moves. But without fundamental news, these moves can reverse as quickly as they showed up.
Right. And meanwhile, we saw a cluster of Form 8K filings from a handful of smaller public companies: Jones Soda Company, Profound Medical, Rhythm, Atlas Energy Solutions, Target Hospitality, BioXcel Therapeutics, among others.
Those filings create a steady drumbeat of company-specific disclosure events. For microcaps, an 8K can be an immediate catalyst for price moves because liquidity is thin and information gets priced quickly.
So traders were watching these as short-term volatility drivers. Long-term investors tend to shrug, but they matter for the people playing event-driven strategies. Let's synthesize the themes. 1. Platform maturation versus execution risk. Poet's capital position and funding are structural signals, but the market will only re-rate if they hit operational KPIs.
2. Geopolitical headlines are a latent shot vector for big tech. Even unconfirmed reports can trigger risk-off moves and implied volatility repricing. Analysts said monitor corroboration and supply chain notices.
3. Enterprise resilience and vendor risk are becoming investable conversations. CloudM's continuity is a concrete example. It's small today in terms of revenue impact, but notable strategically.
4. Retail flows and income investing are distinct but interlinked micro-story sets. Nike's spike is retail attention. Meanwhile, dividend aristocrats narratives keep attracting income investors on longer horizons.
Right, and to put numbers to that, last year's dividend aristocrats picks like NWN, ADM, and PEP produced positive 12-month returns, which feeds the appetite for income names.
Let's talk disagreement among analysts. On Poet, some likened it to Marvell's path, implying possible outsized re-rating if execution follows. Others emphasize the high hurdle to turn Photonics prototypes into repeatable hardware volumes.
On the Iran report, one camp thought this would be a transient headline. Another warned that credible continuation could trigger deeper supply chain repricing for semiconductor equipment and consumer hardware.
And for CloudM, some view cross-platform failover as a boost to enterprise confidence, which could indirectly benefit big platform vendors. Others see it as the start of vendor decoupling that chips away at long contracts.
If you're tracking Poet closely, watch the quarterly shipment figures, revenue recognition tied to engine sales, customer logos, and gross margin progression. Those are the measurable execution milestones.
For the geopolitical thread, look for official statements from the companies named, supply chain notices from OEMs and equipment suppliers, and any corroborating intelligence. That's the data that would change market assumptions.
For CloudM and Microsoft, watch enterprise adoption signals, case studies from regulated customers and partner announcements. That's how you can see whether it moves procurement behavior over time.
And for Nike, follow trading volume, intraday volatility, and options flows. Google Trends spikes are a timing signal for traders, not a replacement for fundamentals.
For the microcaps with 8K filings, the advice is to read each filing carefully. Item numbers matter. The difference between a material agreement and a routine filing is huge for shorts and event traders.
So what about implications for different investor types? Short-term traders benefit from spikes in 8Ks, but should manage liquidity and options technicals. Long-term growth investors note that Poet's runway reduces financing risk, but requires multi-quarter proof.
Income investors still find the dividend aristocrats compelling, but analysts caution to check payout sustainability metrics like payout ratio and free cash flow rather than past returns alone.
Conservative savers face a choice between certificates of deposit and treasuries. That's a liquidity and tax discussion, not a market pick. Institutional allocators should stress test tech exposures for geopolitical and vendor risk scenarios.
3 quick reaction lines.
Big move for Photonics.
Geopolitics added noise.
Retail attention did its thing.
All right, before we wrap, a few clear takeaways. 1. Distinguish structural signals from tactical noise. Poet's cash and targets are structural. The Iran report was a tactical headline that needs corroboration.
2. Anchor decisions to measurable execution milestones. For platform stories, watch shipments, margins, and contracted revenue. For vendor ecosystems, watch adoption and renewal outcomes.
3. Use volatility drivers like Google Trends and 8Ks to size exposure and manage intraday risk, rather than as standalone long-term theses.
And 4. Maintain layered risk management. Geopolitical headlines, vendor dependency shifts, and execution slippage are different risks and should be hedged and diversified where appropriate.
Quick reminder, this is informational only. Analysts note the data and commentary are meant to inform research and risk assessment, not to recommend buying, selling, or holding any security.
Totally. If you want to dig into any of the filings or the POET numbers, head to stockalpha.ai and ask us. We'll answer directly through the Q&A feature.
For more market analysis and to send us your questions, visit stockalpha.ai. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for tuning in. We'll be back after the next market close with another recap.
Take care, everyone. And remember, do your own research and stay curious.